So the war is over and the price is pushing higher. What we are watching right now is a confused market showing you all the signs which you need to understand. Right now, the price is trying to push back up to this territory of $108,000, $109,000. Now, remember, we had two scenarios plotted when the price was still here at 101,000. Yeah, one was like this: you need to go back up to see 107 region and then get rejected. Now, let's see what it shows you right now. This is where things get exciting because the monthly has to play out, and that's just in 5 days. Now you zoom in on multiple assets on monthly, weekly, 3 day, whichever you want, and watch this. You went below the moving average, and now you're coming back up to retest that moving average. If you put that under the momentum side, this is what you see right now. And you still have few days for this week to go ahead. So it's still in red. You go on a 3 day chart and it says, okay, I'm trying to move into a green territory. Until recently, you can actually understand when you go up and you get one red candle, it's still a continuation pattern. What we just saw in the most recent past is one green candle and continuation pattern, you go down. So one of the base argument you can make here is the momentum still persists to the downside. The easy way is the swing highs and swing lows. So when you put this on a weekly chart and then look at this asset, this is the base layout. You were making higher highs, higher lows, higher highs, higher lows, and then higher high, lower low. Something just changed. After that, if you put in a lower high, that is considered as a confirmation that whatever you do in this territory, it really doesn't matter. This most likely will be the outcome. Now, yes, by that time you're developing the head and shoulder, blah, blah, blah. All of that's true. But in between, what's the trouble? For the whales to exit the market, they need liquidity, the exit liquidity. So right here, when you actually go in, look at the last 30 days, you are slowly getting some people coming in, searching into it, but not a lot. So what do they want, the whales? They want a lot more people here in the market. So they are looking to push that price a bit more up until more retail enters the market, giving them the exit liquidity. Now, how can you assure that? You pick up Bitcoin, you put it on a monthly, then we'll look at it on a weekly as well. As of now, with just 5 days to go, this is what you're watching. That's a doji. And that doji is happening while the negative divergence is being confirmed. So each and every time this negative divergence has confirmed in the past, you know what happened. First, back in 2013 to 2014, before 10 years. Yeah, and that played out. Now, the next one was in 2017. That played out. The next one was in 2021, and you know the result. So right now, when the RSI on a monthly chart for Bitcoin is agreeing on something, it is going to be very hard for us to disagree on that trend. Fine. Now remove the negative divergence if you don't like it. You go on a weekly and you're looking at this. Yeah. The resistance trend line, which we call the negative divergence extension, lies in somewhere here. See that? Now, why is that so important? Because if you go back in all of these market cycles and plot that, it shows you something. The 1, the 2, that was the confirmation. The 3 was the starting point of the decline. Okay, so you got the 1, you got the 2. And the negative divergence was confirmed where? On the second one. So the second one confirmed the negative divergence. Now, what about the third one? The third one literally showed you the ABC kind of a move, trapping a lot of people. So if we are doing that, it would look like this for sure. But I don't think it's going to extend to that high. Rather, it can be a retest of the local high somewhere here. Even at that point, if it forms that resistance, which has the higher odds in the market right now, that means what comes next is going to be something to ride. And if you don't have leverage and you're shorting the market, remember your stop loss is way sky high, about $200,000. And what you're looking at is a drop like this for next 1 year. And yes, in between, you'll get these bullish divergence coming in, the micro bullish divergence, I should say. Then you can exit and you can re-enter when it tests the moving average and get rejected. One of the easiest way to go shorting. Then that means 4 months of shorting, 3 to 4 months of shorting, then again staying out for a month, then again going back into 3-4 months. It is going to be the same game for a long time. Now, what will cause those? What will be the news? I don't know. But right here, when you're zooming in, you kind of get a perspective like this. Easy way, put it on a 3-day chart. Watch this. This is a 3-day. You get a bit more noise than the weekly. So if you are trying to analyze the market with a lot more data points to see this, then perfect. Watch. Where are we? Now, why am I highlighting that? Why am I reiterating that? Usually, the negative divergence part or the resistance part in the market, say with this RSI, comes at the second point and then you get a correction. Now, with this swing high to swing high, this is the second point. Then you got a correction. That was like 30%. Fine. So this is the micro. This is the micro second. So you got a correction from there. Now the swing high, you got one here and the next one is forming up here. What do you expect it to do after that? Yeah. So that is with a lot more noise so that you can see through the noise. Fine. See, some argues like, okay, you have to zoom in to look at what's happening right now. Otherwise, you're missing a lot of it. Okay, let me ask you something. You look at the price action and then compare it with the buyer's strength. Yeah. Now watch this local high to this local high in the RSI. So the first high here has been breached. And if you put a vertical line on that first line, it would look like this. You have not yet breached that region. It should be somewhere around 107, 690 plus. Above that is a breach. Yeah. So you're trying to do something. Now, even if you remove that micro resistance on a daily, you have something else. What is that? This has been acting as a strong resistance for some time. So you are right now today at a resistance. A lot more people are trying to come back into the market, buying the market to get the opportunity, to seize the opportunity. What do you think the whales would do? Easy part. You go on Twitter, you go in the platform X, or you go in YouTube and check about Bitcoin, check about XRP, and check what you see there. If 10 out of 10 is showing you something, it's most likely wrong. If 9 out of 10 is showing you something, you know most likely that's wrong. Now, at this point when you watch this, it's going to be very hard to even believe that something like this is going to happen. Why should it happen? Yeah, I agree. I agree. Initially, when you're just here, you can't actually see something like this coming in. I mean, no one can see. Yeah. And that's not Terra Luna. Think about that. That's 2025. You got multiple crashes like that. Now, where did you give up the support? In here. You had a fake out, and for sure you went up to put in a new local high with a long wick, but then you came back down like this. Good. Now, where are you? You got this, you got a wick to the downside, you're trying to go back up somewhere here. Maybe it can come back up to that region, I'm not sure. But the RSI is what limits my thought process on that direction. Because the RSI has been saying this from 2024 and the price action abided by that, you can kind of see, okay, there can be micro moves, but it really does not matter. that trend line stays valid for a long period. Okay, good. Now we pick up, say, for example, XRP. I still get a lot of questions about XRP. We put that onto a 3-day chart. Let's actually look at this and argue, like, what the market is showing. It is trying to put in a double bottom, which is a very healthy sign for anyone who's holding it. But then this resistance, which is the negative divergence extension, that thing is still alive. That is the troubling part. Now, if you want to go back in, and if you think it's going to $10, you have a confirmation here. It will come up, break, retest, and bounce. That is where you want to buy if you want to buy back in. Historically, after a negative divergence, you do not get a run like that. Now watch. Where are you? I mean, this is the trouble, right? This is the trouble. Where did you get the negative divergence confirmed? Here. See, you try to get closer to that and then get rejected each time. So if the history is about to repeat in itself, there is a lot of trouble. Now, go on to the monthly, which is about to close in just 5 days. What do you see in the price action on the monthly? We haven't done anything this month. So people turning bullish right here, right now, without any change on the macro spectrum here. That's very crazy. Now, usually what happens after this, that is known as checkmate pattern like this. You try to go down, you kind of slow down. So you have a micro bounce like this, and then you go down. Yeah. So if that's true, you can do this and then go down. Maybe you're going to come back there, give a lot of people chances somewhere around $2.6, $2.7. But that's what you're looking at. Now here on a weekly, you're trying to see a bounce. Okay, good. Still, all of these bounces are failing at this resistance. That is the trouble in that asset. Now, say when you go pick up the highly correlated assets on the other end, you have a trend line formation in here, which is still valid. If you don't see an invalidation in that, it is going to be very hard. Now, say pick up another asset. This is Doge. Yeah. Now, watch Doge. The price action has not recovered. So this is one asset which shows you I haven't recovered back to the territory where I got all these news and drops in the recent past. Yeah. So when you watch this in last 1 month, you're like, okay, there's something evolving there. You pick up Ether. It shows you like, okay, fine, watch. I had a checkmate pattern when I was going to the upside. I had this. I got rejected for sure. But now I'm trying to retrace back. Will that retracel be something like this? On a micro, for sure. Now pick up Cardano. You look at Cardano, it corrected back to a local support. It did not lose the support, which is a good sign, because losing that support could have been a bad sign. Now, this is your extension region here. You can come back up and still you are below that resistance. And you know what happens when you stay and flirt below that resistance. There are multiple times you come back up, get rejected. So asset by asset, when you go through this, you kind of get that idea, okay, this is what the market is showing you. This is the macro where you had a sell. Now we're coming back up to retest that. You're holding on to this region. Will you make a double top and get rejected, forming that trend line and respecting it? Or will you break to the upside? This is the biggest question here. But let me ask you something. The trend line formation in here in the RSI, which is negative divergence trend line, watch this. Yes, you have some room, but each time after you formed that negative divergence on the swing highs, you didn't actually put in a local swing high after the negative divergence. So that is like a confidence part in here saying, okay, if you want a short and you missed, you didn't get a good price, this is going to be the best price. Just don't go ultra levered, because they are going to do something which we didn't anticipate before the price action really drops back down, because history kind of shows you this. It's very clear. When the price action travels inside a channel, that's not its impulsive direction. It's very hard to believe that this is a channel and we're not in an impulsive direction, because we moved all the way from $15,000 to $110,000. Yeah? So it's very hard. But that's the history. When you actually correct back down, you've seen that before, that when you remain inside a channel, that is not the impulsive direction, even though it will feel like, oh, I'm going down, down, down forever. The moment the reversal comes in, it goes up. So the moment the reversal comes in, it's going to go down crazy in here. Be prepared, because this is going to be a 90% drop on a lot of crypto exchanges. We'll see a lot of trouble in next, say, 6 to 12 months. We're going to see somewhere around 9 months on average where all of this plays out. So I want you guys to be very careful. And if you want all these type of charts at the right time, be a part of the Scientific Investor family. Use the link in the description below. Right now, you'll be confused. Wait for a week, wait for a month, and you'll see, oh, that was true. Yeah. But why wait when you can literally join today, learn things, and do the shorts whenever, wherever you want. So if you received value, smash the like button. I'll meet you guys in the next video. Bye for now.